Good evening, traders. Wonderful to see you all. I noticed the other day that Big W give you the opportunity to make a little photo book, and it's really good. And you can upload all your pictures. And at the moment they've got a special. Normally it's $30, but it's $10, and it comes back to you, and it looks like a full professional book. And we got one of our little baby boy with all the nice pictures in it, and it's a real quality book. Like, you could put it on your coffee table and you'd think you'd got it from Angus and Robinson, the bookstore. And then I also found an excellent website called Wordle, wrdle.net, and you can put in a article you've written in Wordle and it makes all the words big and small. It's called a word cloud. I think you've all seen them before. And all the words are big and small and turned around and arty in different colours. But it actually has a serious purpose, which is if you've gone on a rant about something and you've used a word too much, it'll show you, because each word, the size of the word is... I diverge, if you'll forgive me for doing so, while we wait for everyone. And while we are, I'm going to show you Wordle, and then we'll get underway, and don't worry, we'll go a little longer. You'll get your full hour of actual coaching. But I just want to show you something, and then I've got an important question to ask you. Okay, so here's an article, and I wrote, is trading an art or a science? And I think Brendan will be updating this tonight with another article we've got. But so you take your article, and it takes out all the common words, but I want to show what a word cloud is and why people use them. Okay, so what I'd do is I go to Wordle and I hit create, and I paste in my text, and then I hit go, and all the words I use a lot are going to be big, and all the words I don't use much at all will be small, and the common words will be removed, like and or and things like that will be completely removed. Okay, so there is my, yours is just loading. There's my art. Okay, so then I get fancy about it. Watch this. Now there is a reason to this. Okay, so I might do something like that. And so you can see I talked about trading the most, discretion the second most. I talked about art, science, plan, and then all the other words go small like that. And then there's no end of things you can do. You can change the font, throw it around, and make it quite arty. And the serious reason behind you'd use something like this is I can say, okay, I talked about discretion too much because I didn't want it to stand out that much when I was mentioning discretion. So obviously I went on a rant too much about the trading rooms. Okay, so I need to cut it down the word discretion a little. So that's where you'd use it. But the reason I mention this to you is, and I want your opinion on it, is what we could do is I was thinking of making an e-course module where you go to something like the Big W website for $10 where you make a 20-page photographic book that you can put on your coffee table. Or for those of you who have a Mac, then you can do it with your nice pretty MacBook. But on the front cover, you would write all your keywords, and you'd just put more of the words that you're really passionate about with your trading and your focus and all that. And you'd make a word cloud, right? And you'd put this graphic on the front, and you'd upload it as a JPEG, and you'd make that the front cover. And then inside, you would put all the things from the workshop that stuck out to you, that in terms of goal and focus and mastering things and success as a wobbly line plan for the plateaus, things like that. And then you'd put pictures from, say, iStock Photo and stuff that really inspire you. Now, iStock Photo, for those of you who don't know, is you can get some of the most beautiful and gorgeous pictures you have ever seen. They've got over, I don't know how many millions of photos, at least over 5 million photos. But let's say you want a vineyard or something like that at sunset, and then you can put a picture of that in. But what it would be, this book would be it's like a goal-setting module, but it costs you $10 to create it. You'd feel like you're a kid back at school again, and you can put it on your coffee table with a stunning cover like this, with a word cloud, and remind yourself every time you walk past, that's what I'm about, that's where I'm going. So who would be interested in me making an e-course module like that on goal setting? Would that be useful, or am I completely diverging? Sounds interesting, yep. Why not? Alright, well, I got excited about it. Alright, trading, let's get back to it. How did you all go first? I'm just going to bring up my charts, and I'm going to show you. So I'm bringing up a new chart here. I'm bringing up, actually I'll bring up the ES and I'll put it on hourly, 60 minute, and we'll go back 65 days. Your homework for the week has been 3 moving averages. And we talked about a 20, a 50 and a 100 simple moving average. To speed things up, I'm going to show you how to do them as a template. So you put your 3 indicators on as you always do. So I'm going down to my SMA, new, 20, width, I'm making it say about 3, and I apply. So there's my 20, and I do it again with my 50, and so on, and then the 100. I'll quickly do it. Now for those of you, there's some of you who are new from our latest coaching and you'll have no idea what I'm talking about with the 3 moving average system. Every week we get homework and we have to go away and create systems, and then we come back and I say, you show me yours, I'll show you mine, and then people say things like, oh, I was pressed for time, but here's what I do have, and it's like, okay, well, you put in the effort, that's good to see. You did what you could do. And then we share systems, and then we move on to the next, and with each system we discuss ones that are useful and ones that are useless, and different approaches to both. Okay, so we've got the 3 systems here. This is what I want to show you. It gets very annoying always applying the 3 on all the time. So here's a trick. You right click and you say templates and you say save as, right? And then I've called mine 60-minute bias MAs, but you might just call yours a triple MA system or something like that. And you click OK. And I'll show you why it's useful. I can remove all my indicators. Now every time I'm looking at any chart and I want to put my 3 SMAs on, which I have grown to really enjoy, I right click, I go templates, load, OK, and they're all there. No effort at all. So that's how to apply templates, so you don't have to apply the indicators individually every time. And then you can add whatever you want and save it and build on the templates. You might have these plus other things and keep them all as one template and throw it on in one go. Okay, your homework was the 3 moving averages. Brendan chatted to me during the week and said everyone likes and respects the market move type systems. The idea that you would take something that's a monumental shift in price and you'd capture that. And if nothing much is going on, it doesn't pick up on it. The problem is though, if people only get one of those opportunities every 2 weeks or something, then that's a lot of time to sit around. And we agreed, yep, that's true, but then you've got systems where you can trade on the hour, each hour, like the monkey system, you remember that? Yeah, that's true too. But there's traders who would like to just trade 3 hours a day every day, have signals, and then go to bed. But we agreed, well, that's trading noise. Yes, you can do it, but would you really want to? So we actually wrote an entire article just on that, and Brendan, I think, will be publishing it on WordPress or in the forum or both. And it's a good read to discuss both. But those of you who build systems with me will know I've got little time for noise systems. Noise systems means a 5-minute or a 10-minute chart. And the reason I don't like them is because 1 month, 2 months later they're going to change, and when they do change it does massive damage to you. But the challenge with that is the entire industry is educated on the exciting idea that you can sit in front of the charts, trade 3 hours a day and retire by taking 3 or 4 moves in, out, in, out. When you look at the stats, when you look at how many people actually achieve that, they're 0 and none. If you look at what the successful traders are doing, they're taking market moves. Now, having said all this, don't worry, I'm going to show you a noise system today, but within each system we show you, I don't mind. Sometimes I'll show you market move systems, which is what I like, and sometimes I'll show you noise systems if that's the style you're interested in, where, yeah, sure, you can have 1-2 trades a night, no problem. So I'll build them for you. If anyone's going to build them and help you with them, I'd want it to be me. And I'm not blowing my own trumpet, but I've done it for so long and for so many hours each day in the past that I know where to step if you're going to go down that path. But yeah, the danger with a noise system is it can change on you quite quickly, so you just need to be very careful with it. So what I'm going to do first is, on the hourly, I'm just going to go through and make a few observations with my MAs, and then I'm going to move to a different chart, and I'm going to sort of zoom in a bit and make some more observations and show you the thinking behind putting together a noise system. First of all, I'll just tell you a little about my noise system. So I could have chosen a market move system. So on both systems, we're talking about 3 moving averages. Your task for the week was to build a system with the 20, 50, 100. Now, if I had my way, I would be looking at hourly, or no, I probably wouldn't look much above or below. I'd probably stick to hourly, and I want a big shift that's going to move, like catch a half a day move, right? And I'd want to see that repeat for the last 2 years, and I'd want to see it trigger every 2 weeks or once every 3 weeks or something like that, and I want it to run at 80% success, and I want my profit to stop to be equal or my profit to be bigger. That's the type of system I'm interested in, and when you can see them coming, there's no time involved in trading these things manually, because let's say I want an MA cross. Well, to the right you can see the live market on the right. Is the MA is about to cross? No, of course not. They're fanning to the upside for a buy bias. Okay, absolutely they're not about to cross. So my trading time tonight is 0 if I was trading the crosses. Okay, so in my opinion, it's not time consuming. But what I was saying before about there's a need, in order to make a trader successful, you first need to uneducate false expectations that are imposed by an industry that flourishes on systems that don't work, before you can then educate them on what does work. So you've got an entire industry of trading rooms and books and services where it's like, take a lot of trades and you'll be done. Now, if they know full well that that successful traders just take a few trades every now and then, but you can't keep people entertained, and you can't charge them for a trading room if they have to sit there and wait all week for one decent trade. They just they go crazy. They want action. They want adventure. They want excitement. Taking a trade is like being a fighter jet pilot. It's an absolute adrenaline rush. Okay, and people can get addicted to that. And so to cater for that, they take more trading opportunities. Now, it in theory sounds like one of the most glamorous and exciting things to do. In practice, it is one of the hardest physical activities a human being can undertake. Now, one major trader, one very, very big player, made the comment once, and I've said this before, intraday trading's a mugs game. And you think, what? I mean, what we do, Greg, is intraday trading. You're telling us we're all mugs? No, I'm not. Listen to what he was saying. He was saying intraday trading is a mugs game. And he said, it's a mugs game in that it's the hardest thing to do, and he doesn't know why it is that all traders would begin from that point of view. Now, if you look at his trading style, it is entering intraday, but it's for a decent move. Okay, so he wouldn't consider himself a mug. He'd consider himself a professional trader, because he might look at hourly, okay, or he might zoom in a bit to half an hour or 15 minutes, but he's looking for a decent move, okay, something as monumentally significant as price is going to shift to a new level, and he'll enter, and he might enter early in the American morning, so Australian time. He would probably enter, and this is what I've been saying all along, as a lot of big traders do this, anywhere from 6 till 11 at night Australian time. Okay, he'll see a reason to hop in, he'll hop in, and then he'll let the market take him for a few hours in that direction and hop out, and he's capturing a decent move. Okay, and so he was getting in for intraday reasons, but he wouldn't call himself an intraday trader trading noise. Okay, or he wouldn't call himself a mug from the point of view of he's not zooming into a fine resolution. Okay, so to explain that to people, there's two ways they can do it really. Is they can come about from years of learning the hard way and finding that it's just tough, or they can come to that realization if someone explains it. Now, what I'm trying to do right now is explain. I don't know if I'm going to be successful or not. So I thought, okay, there's two ways to explain it. Another way is to build some noise systems, some good ones, some bad ones as well, and say, okay, if you were excited about doing that, fine, here's how you do it, but here's what's ahead. Here's what you will come up against. Just be aware of it, and if that's your style and that's the way you want to go, okay, great. But here's the best way to do it. And where possible, I would really like to show each week both systems. So I'm going to show you mine, and then I'm going to ask you how you would adjust it or what you would consider to make it more acceptable for how I qualify it. The noise system I'm actually going to show you today is quite good. Okay, if I may say so myself, I'm quite happy with it. There's one or two things that would need a little bit more of a polish, but I'm pretty happy with it. Now, I have a question for you. Who here has built a system? It doesn't matter what chart or style, it'd obviously be one that you feel comfortable with the 3 MAs. Can I have a yes if you have this week and a no if you haven't? And a if you tried but you just couldn't put one together that you were happy with. It was just like an average 50-50 thing that sort of drove you up the wall, and it all got a bit hard and you thought, blow it. I'm going to show you the thinking. Even if I'm building a noise system, I'll still look at real proper price moves to base my thinking before I then go down, because those principles should still apply. So on screen we have the S&P 500. Now the S&P 500 is, I think, probably one of the hardest indexes to build any trading system, period. Why? Well, it's, for starters, one of the biggest. Because it's one of the biggest, it's the most liquid. Because it's the most liquid, the big players can play their games. So if they can, then they can apply whatever they want. Also, because it's the biggest, you've got the most number of traders trading it. Okay, so that means you've got the most number of systems participating, and different types of systems all getting in for all different types of reasons. So if you've got that, then you've got one of the most advanced examples of a man-made open capitalist free market system or market. So because of that reason, if you're going to write a system that works on the ES, and you can find or just a general approach that's going to work on that, and then you take it somewhere else or to apply it to something else, the chances are it'll work better or easier. Or put another way, if you cut your teeth, which means you do your practice or you do your time on the ES, the S&P, then when you go to other markets and charts, you'll feel like it's a walk in the park. Okay, if you walk from this to one of the FX pairs, then you'll be like, oh, this is a lot easier. Now you'll find the Euro USD is harder than the other FX pairs because for all those same reasons. And then if you move to the others, you're like, oh. And if you go off the little beaten track a little bit to something that's, you know, like orange juice or something where you just wouldn't really want to trade that intraday because there's probably just not the liquidity there. But you apply your indicators and you're like, oh, that's really easy. Okay, so interesting. So with that in mind, the system I've got where it gives me lots of trades, I wanted to give you a system today that provides lots of trades. Now let me define lots of trades. Remember how when I build one for you it might only be 50 or 60 trades. So this one I'm showing you has 429 trades from 2007 till now. And that's its profit line up through there. So a lot of trades. As you'll agree, that's a big shift from the other things. Remember we were talking about gaps and R3, S3. Did you notice there was a R3 this week on the ES with 5 and 5? So there's an awful lot of trades that make this one up, so there's a lot of opportunities. Now, even though I will be applying it and showing the system to you on USD Japan on a 20-minute, before I go there and do that, I'm going to first look for the principles on why I would take a trade on the ES hourly. Because remember all the reasons why I said the ES is one of the most difficult, but it's also one of the most liquid, and if you get it right, it's the best place to start. It's also a solid foundation. So what I would do, and can you see why I would, is I would look here for how price moves with the 3 MAs first. And how it moves here is where I will form my opinion for the other charts and markets I then apply it to. And then I'll find it'll probably work slightly different on them. But my general conclusions, I'll start them from here. So let's say, for example, I'm interested in a 20 MA crossing the 100, and then the grey 50 simple moving average is doing a certain thing. Okay, well, I'm going to observe that first on this one, and then I'll take it to where I'm more interested in. Okay, but I'll form my generalizations here. Okay, who finds that interesting? Or have I just confused you? So I just want to explain why I'm starting here to make my observations. Yep, okay. Alright, so okay, so here we are. I'm looking at this and I'm going, alright, how does price move? Remember, you're more interested in the move first and then what the indicator is doing second, not the other way around. So here price is just moving on up through, and it's pulling back with each of its up moves. One thing we could do is we could say, alright, at this point here, all three are in an uptrend. We have 20 on top, 50 in the middle, 100 on the bottom. And so that's up move. Okay. And that's okay. And then for a down move, you'll remember, like this one, at this point here, we have the 20 on the bottom, then the 50 in the middle, then the 100 on top. So that's a down move. They've all fanned out to how they should be. So we could look at that and say, But if we study that a little bit, we'll see that it's possible that we could get like this. Completely chopped up in noise. Okay, so if the S&P hourly tells me that that type of approach is going to get cut to pieces in noise, well, I'm not going to go look at that at anything else, because then certainly if I do head into the noise region, that's going to completely obliterate things. Okay, interesting. Alright, back to square one. Always start with a purist example and do thinking a different way. So I'm going to go back to our first view again. Okay, so there we are, a nice cross, and everything went to the buy movement and price lifted. Okay, what's something interesting about when it happened earlier? Well, what about when the 20 crossed the 100? Never mind the 50. We'll just go to the two extremes here. We've got 3 MAs. We'll deal with the fastest one and the very slowest one, and the middle one we'll just put aside for the moment. So I'm interested in the orange and the black. Alright. Well, what about when the orange cuts up above the black? Okay, yep, not bad, that's good. I'm just disregarding the grey entirely. Now I'm going to find where the orange cuts down below the black. Okay, here's another example there. Sorry, there you go, so that's there. So here it's moved on down. Now that's a lot more responsive for the move than down below further where all three are fanned out. So I can see this is more responsive, but I'm also going to have still a problem with chop and noise, aren't I? But I'm happy that that's got me in nice and early. So if it gets me in earlier to the same move, I call it being more responsive. Okay, let's just observe where it's crossed again. Okay, so it's crossed here. There on your chart. Okay, so orange is cutting up above the black one. Okay, very nice. And down here. Now, I'm not stupid enough to think that in 2009 I can put a 2 MA system on the S&P 500 hourly and say we're home and hosed. Okay, don't get me wrong. But if we're just making observations, which we'll then adopt as generalizations and we'll take with us. Now I would, if I had my way, have everyone apply them to the hourly and the style I talked about. Okay, so this still dropped, but it gave us a bit of heat, but that's okay. Let's look for examples where it was just a terrible idea. Here's one. Just got to practice slowing down my speech for your screen. There. Can you all see that? So the orange cut up above the black. So that would be my point. Now I look at that and I think, what could I do about that? Okay, I've got two questions for everyone. I want everyone to respond. Firstly, is everyone keeping up with me? And everyone's comfortable with what we're looking at? We're just looking at the orange cutting the black, not too hard. Good. Okay, my second question is, here's a scenario that wasn't pretty to go long to benefit from a rising market. What's some of the things we could do to change this? Thanks for the feedback, Karen. Okay, so here's what my simple thought is. Alright, it's supposed to be rising. Why would you get in on a massive red candle like that? So the first thing is, okay, why don't we just in our heads, because we're starting to form an opinion and a generalization, is oh, good. I didn't even notice that. Karina says, look at the time. That's right on market close on the Friday. Yeah, it is too. Very good. Okay, so that's one thing, is time windows, excellent. More simple than that, but I would absolutely every time want you to look at that too. But I would say it's a red candle, and it's a big one. I would want a green candle. So I would want a cross. Now, if I don't have a green candle, do I write the system off? Here's an idea. What about we say, yep, it's a signal. Now we're waiting for a green candle. So we've had the cross, and we still call it valid, but we're getting in after the hourly has given us a green candle. There. Do you see that? Now if we went long there, on hourly, just to put it in perspective for those of you who are just watching, that's over the next 3 get green candles. That's quite a move. That's monumental. Okay, so even if we picked up the next 3 hours, that's good. Okay, so that's a good thing. So that's interesting. So we wouldn't just write the opportunity off entirely. We'd just say we'll just wait for the correct coloured candle as well. Okay, going to my left here, the orange is cut below the black, and the first candle was green, and then it was red, and it gave us a lot of heat, and then it dropped down below like that. Now that's at midnight. So it's interesting, these two. We had one right on market close and one on midnight, and they weren't particularly exciting. Okay, Jenny, I like your comment, which is colour of the candle. You were right. Well done. And also the size of the candle. Good. Alright, let's go look at a few more. Here we are. Obviously that's an established up move. Okay, the cross was there. So there's our green candle after the cross. And I was happy to go along there. And there's a short. Opportunity there. Okay, there's our next long opportunity here. Okay, so with all that, it's a bit more responsive, and it seems to be working okay. Now, what was our sample size? Did we look at a decent amount of time? 65 days back, and down on the slider at the bottom you can see I'm about a bit over halfway. So we've looked at a bit over a month. Okay, that's interesting. One observation I made too was that with the grey one, the position of that, so in each scenario where we're looking at the fast and the slow, the 20 and the 100, you may or may not have an opportunity, the colour of the candle, and then what is the grey doing? Where is it? And you can make some interesting observations from that. There's another one there. So my next port of call after doing all this was like, okay, interesting. Now I'm heading off to an FX currency pair. I want a 20-minute because I hear people want more trades. Okay, no worries. We'll see if we can design both. We'll do market moves, and we'll also do what I call noise, but we'll make it half decent. So here we are, we're on USD Japan. It's very nice. Get rid of all my annoying markers. And the first thing we'll do is just right click and go templates, load, and put our 3 MAs on like that. So here we are on the 20-minute. Now we're interested in observing the same thing. So we say, okay, I wonder how our observations went here. And so here's a cross, and it's a green candle, and it got some heat, but then it lifted up. Now I'd actually check with, yeah, no, that's a cross right there, and then it went up. And so then I look for some more. So here's a cross down through here. And then I'm very pleased about this. We've got absolute chop. We've got the 20 cutting above and below the black one and wrecking havoc. Going chop, 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 chop above and below. So you need to decide what it is you'd like to do about that. Well, the position of the grey 50 is going to weed out half of them, depending on how you choose to place that. And I'll tell you how I chose to place it. So then, what I've done here is I make a PowerPoint and I make a collection of my observations. Now my ideal short, I've got a picture of it for you. So there's my ideal short, 20 crossing the 100, and I want the 50 to be on the upside. I want it to be way up and away, because if it's up above like that, what it tells me is price is rolling on over. And then for a long example, like this one here, and you can see these examples are taken from, I think, the Euro USD Japan 60-minute, but they're good examples. So here we've got the 20 crossing the 100, nice, and the grey 50 is on the bottom. And can anyone sort of see, even though we're getting in at the point discussed, can anyone see the arrow that you can make out of the 3 MAs that I was talking about that time? And you can still see it there. Okay, so we're on a 20-minute chart. We've got the 3 moving averages. Now the system I put together is an 80 pip profit, 80 pip stop. If you're using gain mini 10th pip FX account, on the gain you'd actually enter 800 and 800 because you've got another point of precision, and that equates to 80 and 80. And then I've got what I do for longs and shorts, 20 above and 20 below the 100. The 50 needs to be in the logical location I explained. Now, what do I do if I'm in a trade and I get an opposing trade? Well, I do take the opposing trade, Now, what about the time of day I would take such a trade? Well, the longs and shorts trigger all day, every day, 24 hours a day. However, I just decided to put in one time window, which was the longs turn themselves off and go silent between 8 AM and 3 PM in the afternoon during the American day. Okay, so there's just a window of time in the 24-hour period where the longs just switch off and don't trigger. Because as I was looking at each window, I just found that there's just a spot there where not only they don't work, but they're counterproductive. So I put that in, and this is from the start of 2007 till now, and my profit line goes on up. Let me see if I can make that bigger for you. Now, including spread, I found that to return about 3,000. It would have been an account that started around whatever you want to start it at, $300 or $600 or something, and you would make or lose $80 a trade. And 2 years later, that grew up to become about a $3,800 account, which is nice. What's nicer is when you've got 16 of them doing that, and they're based on solid moves. But what else is there to say on this? Okay, so I looked at that, and that's nice. But see how it's noisy? It's quite noisy, but it gives you lots of trades. Now, I'll explain why I don't like a system like this. Because you can build something like that, and you can go, wee, that's so exciting, wow. And it's like, yeah, but try trade it. Try trade it. Right, see this here? You think, yeah, I see it, and it's okay, and see that there. But I'd deal with it. Yeah, but that's a month and a half or 2 months. How are you going to go trading for 2 months and your system's not working? I mean, it might go up to there, and you apply it, and you've got to trade through a 2-month period that's tough. And you say, yeah, but I've got ways of measuring when it's tough. I've got ways of measuring when the system's come to an end, I'm not going to use it anymore. And I've got ways of saying when the system's fine, I'm going to keep using it. Yeah, true. But that's why a system based on market moves it's very easy to classify, right, it's over, it's done, this system's dead, or no, it's perfectly normal, I'll keep running it. Okay, so now why I'm showing you this is, yes, I'm saying build it manually, I'm saying build a manual visual library. Okay, the only reason I'm showing you this fancy graph is it's the only way I can quickly show you how this thing has actually gone from way back then quickly. And put it in a little bit of context. Okay, but there's more to the story. This gets quite interesting. Number of trades, 429 from the start of 2007 till now. Okay, so lots of trades. How many trading days are there in a year? I don't know. Someone tell me, 200 or something? So 250 or something. So we're almost getting a trade a day, or a bit over a trade a day. That's not bad. Longs and shorts. See up the top here, we've got long and short. Okay, so I'm getting about 200 longs, and I'm getting about 227 shorts. Quite good. Percent success. Remember the profit and stop was equal. We had an 80 pip profit, 80 pip stop, and if you just trade $1 a pip, so it's 80, you're making or losing $80 a trade. Now there's something interesting here. Percent profitable longs is only 47%, so therefore we should actually be losing money on them, and we're not. And 51%, sorry I just drew over the number, 51% I think it was, on shorts. Well, hello, where's our 60 or 70% success? I mean, there's something's not right. And how can it be? How can it be that you can run at that, yet have net profits up here that are, I've condensed them down into cents for all the reasons I normally explain, but they're actually quite profitable. Even though they're in cents, you can still see proportionally we lost 0.42, we made 0.61, so the difference was 0.19. And certainly on the shorts you can see we lost 4.7, we made 0.84, the difference is 34. So what we're doing is for every 2 steps forward, we're taking 1 step back. So financially, even though I was running at 50% success, even though the profit and stop's equal, we're actually taking 2 steps forward, 1 step back, and it's actually, and we saw our profit line doing quite well. How can that be? What's going on? Well, what are the things that are happening? You'll remember there was one detail, which was if I'm in a trade and I get an opposing signal, I hop straight out and into the other one. Do you remember that? That's the only scenario when the profit and stop can change. And obviously it has such an impact that it really comes down to the making or the breaking of this system. Because if you have a look at the difference, we've got total, on longs, we've got total number of winners and losers, and the difference there is, I mean, let's do our sums. I'm just pulling out my calculator. Sorry to get technical, guys, but you've got to think about these things, and if somebody explains it all to you, it'll just expand your mind a little. 5, 6, 7. So there's a difference of 12. If we had 107 losers and 95 winners, then it's 12 overall times 80. So it's not even $1,000 that this section here equates for. And this is only 5. There's a difference here between 116 and 111 is only 5, so 5 times 80. That's only 400. So about $1,400. But Greg said that this system made about 3,800, and it does if I put 10k lots through it, and I can plot that and show you. So therefore it can own, and here it is up the top as well, so it actually is doing that. So therefore it has to come down to the early exit, the reversing, going the other way. Now, another thing, maximum consistent losers. On this system it needs a bit, you could polish it if you want from the parameters I gave, but maximum stops in a row is 6. Now I don't know about you, but I cannot deal with 6 in a row. On the longs or the shorts, or you put them together, that's 8 in a row. Now 8 times 80, right, even if you're just doing $1 a pip, it's $640 loss. For a new trader, that's still going to hurt a bit. Okay, and then maximum number of winners is 10, so you can go 10 wins in a row. That's pretty nice. Okay, that's $800, thank you. That'll be the time when you get on your phone and tell your rallies how how good you're doing. Then the next day they don't hear from you because you had a bad day. Okay, but when you look at it like that and break it down, it's very insightful, isn't it? See, there's some of these things you learn that you're just not going to normally pick up on. Okay, but really, and I'll keep promoting my reasons why. So now I'm going to go back to this profit line. Okay, so you can build systems, and you can build systems that are profitable, but if they're based on noise, I don't like them, and that's why. So there you are, there's a system, take it, trade it, get a signal or two every day. If one was going to be built, I think this one is quite stunning. I think it would rival some of the things that you'd pay many thousands of dollars for, and companies often only base their entire company on 1 or 2 trading approaches. I mean, with our coaching, we're doing, what, 1 a week, and we're going through for 3 months. But everything the entire company is based on, it might be just divergence, for example, and that's all. So they would cling to something like this. But I say just think bigger. So that's one system. Now, if you want to build a system like that and you want lots of signals, great. I think I've talked your ear completely off on the reasons why you can, but try not to. And then there's all the reasons why you would base it on more monumental moves. So if we were going to do that, so that I know that everyone's been listening, what would you base it on? What chart would you base it on if you're going to look for something decent? A real market move. If you want to, as I say, if you want to take a trade tonight, there's an example of a great system. Make sure your system is at least that good, and then knock yourself out. Take a trade tonight. Brilliant. Or 2 or 3 trades a night in your given time. But I just want to show you what it's going to take for you guys to be outstanding traders. I'm deadly serious about you guys becoming outstanding traders. Okay. So what chart would you use if you're going to do a market move version as well? Because no harm done. Make a noise and a market move system for each system, because sometimes you might find you like them both. I'm not going to show you a market move system for the 3 MAs tonight. Yep, exactly. You'd do it on hourly. Yep. And would you put a time window in? Yes, you would. You'd just say, I'm just going to do it from this time to this time, and I'm going to check it on the hour, at the end of the hour, all those type of things. Alright. Now, next thing I want to discuss is what we're going to move on to. Have I given you all huge amounts of thought for building a 3MA system, how to go about it, but also the approaches? Sorry to go on so much about noise and market moves, but the reason I go on about it so much is there's an entire industry, and there's a reason why 95% of traders fail is because they are misinformed right from the start, and all they know about is basically what I call a noise system. Yam says, I assume this is a day trading system for Forex. Absolutely it is. It is the USD Japan currency pair 20-minute chart. Right, now we progress, everybody, now we progress. That's that done. I hope if you haven't yet built a 3MA system that's given you more ideas. I hope you do. If you can, build both. I hope for every system you build a version of both and become comfortable with both types of system. Shall we call it a high resolution system and a sort of a stand back, slower chart moving system, for want of a different name. Now, divergence. Who here understands divergence? Your homework will be to build a system based on divergence. Next week we'll be going through that in quite a bit of detail. Yep, who here has built systems, I guess, on a DS and a MACD and know those systems very well? And who here has applied them to tick charts? I guess, yep. Yeah, okay. All very nice. But divergences can be hugely powerful. They can also be dreadful. I want you to build a market move divergence system this week. Not a noise one. That's your homework. The indicator I want you to build it on is one you haven't heard of. But there's a good reason why I want you to use it. Is there anyone... Can someone just write in if they have no idea what divergence is? If you have no idea, just type in a no idea. Okay, yep, everyone knows. Okay, good. Okay, I'm going to bring up USD Japan 60-minute, and I'm going to show you, because remember with divergence there's no end of indicators you could use for it. You could use your stochastic, your MACD, your CCI, your ADX, your RSI, which to use. Okay, I'll show you the one I want you to use. I want you to use TRIX. Set at, now I'm going to have to remind myself of what that's going to have to be set at. I think it's 5. Let me go have a look at one of my systems. One moment, traders. Please excuse me. Have a 1 minute sip of water while I just check the optimum setting on my other computer, and I'll be back to you. Okay, I'm back. Okay, it is at 5. Now here we are here. I'm going to just adjust them some more. So period or periodicity of 5. It's like use and utilize. Why would you have those two words? It's like period and periodicity anyway. So the default one is going to be a thick one. The signal one, never mind. That one you can make transparent. Now, I'm not interested in getting an email during the week saying, sorry, I forgot those settings, can I have them again? Okay, we're all here together, it's in front of you, take a screenshot of it if you want. Your eCourse shows you how, PRTSC. But I want TRIX, period of 5. And the main default, width of 5 is probably a bit much, sorry. Yeah, so period of 5, but I'm talking about the widths, just not so thick. And the signal line, just make that invisible. Now I actually like setting it on orange. Now your job is to go and find, do a noise one if you want, and a market move one, but I want you to build systems that are based on divergence on your market and chart of choice, and that is your challenge. Now, why TRIX? Well, first of all, I need to probably frame, if I may, my authority on divergence. Now, I've worked, as some of you may know, for 2 years, 12 hours a day, building new divergence systems. And I did it with a DS and a MACD, but then I did it with every other type of indicator you can dream of. And I've got some pretty flash computer code now that works it all out for me. So I can say, alright, and you can call me a cheat, but it's like, yeah, but I spent probably 6 months on the phone to coders getting it done as well, so I did it the hard way. But I can look at every type of parameter and say, okay, what do I really need? What is the best settings for a divergence? And one thing you see is, okay, what is best? Is the stochastic or the MACD, and how do they all work? And that type of thing. And they all work okay, and they come and go. But because they're so common and everyone's using them, the systems are really visible. What I mean by really visible is a stochastic divergence on any market or chart to the computer systems is really evident when one is working, and so a lot of computers start all trading at once, and it becomes effective pretty quick. And you can almost pick what it's based on too, pretty easily. Another interesting, and I might show you this next week, is I can show you a system which is RSI divergence on AUD USD around lunchtime, and every time the divergence happens, it's amazing. If you do the opposite of the divergence, so every time the divergence happens, you what's called fade it, and you head in the other direction, you'll actually have an amazing winning system. And for, I don't know, a year and a half, it's been an amazing strategy. So it's not necessarily what's written in the textbooks about how to use it, but it's what is consistent. Now, what should we look for? Well, your time windows are very important. I can't remember. Someone's asked me, is that our lunch or the US lunch? I can't remember. I'll show it to you next time we meet, and you'll be fascinated to see it. Yeah. But yeah, I'll absolutely show you. It's you'll be like, whoa, I can't believe it. You see an absolute blindingly obvious divergence, and doing the opposite actually works. But okay, here's what's important. Time windows, you want to surround it by time windows. Oh, sorry, before I go on to that. So why TRIX? Okay, so you've got all these different indicators, and they're all very common, and they're all essentially either spotting a divergence or not, and it's even sometimes it's appropriate to use it, sometimes it's not. Sometimes the market just keeps on going against you, and it's not going to, it's just going to stop you out every time. But what's interesting about the TRIX is it's a new oscillator on the scene, not known by a lot of people. The way it's designed is it's based on EMAs of EMAs, put together in a way, if you want, you can just Google it and it'll show you all the code of how it works if you're technically minded. It's no secret. But they're put together in a way where it's not really lagging. It truly does benefit for all the reasons why an oscillator can be good. But at the same time, it doesn't fall under the Coleman category that everyone looks at, so it doesn't behave exactly like a stochastic or exactly like CCI, which are just so used. So what happens, what ends up happening, is it brings out divergence as well when there's one that all the others would, but it doesn't false trigger so much on a lot of them too, and it's a lot easier to build it with this than some of the other things. So that's why I'm saying use that with what you put together. Another interesting thing is there's so many parameters that you can use to lace divergence. Divergence is very old. It's so old that, well, it's interesting. Even if you went back 3 years, any divergence system, and you'd probably get away with it and you'd be able to trade it okay. But we've seen such a change in trading that now to make a divergence system work, you've got to shroud it with so many ifs and buts and rules and reasons why you'd take them all except this one and that type of thing, that it makes you question their usefulness at all. But yeah, so for that reason we enjoy using something like the TRIX, because it doesn't false trigger so much for that type of thing from the more modern systems. And some of the useful rules you will want to consider when building a system, which is really helpful, is, okay, what's the number of candles between the zeros? So we call a zero like the turning points down the bottom, so I'll just show you. So for example, I'm just going to get my drawing arrow. What's an arrow? Control F2. I think I do that every session. I forget what it is. So there's one turning point and there's another, and we call those the 0 points for the 0 candles. There, and we say we have lower in price, we have higher on the indicators, therefore we have a buy here, and we expect price to go up. Right, so that's divergence. Well, and when you're casing it with rules, there's rules and there's rules. Ones that are actually really helpful is number of candles between the zeros is an excellent filter. So when you're building your systems this week, say, okay, I need a minimum of 20 candles between the divergence points, or whatever, and a maximum. And then you might say, what about price difference, like how much lower is the second point of price? That doesn't matter so much, but number of candles between is really important, and the time of day you do it is really important. Beyond that, you can lace it with 1,000 rules, but the others don't really matter so much. And then you might say, oh, what about move to break evens and fancy things like that, or scaling out? No. When you crunch the numbers and when it's all said and done, it does not actually have that much of a benefit in making a system any particularly any better. So, sorry, but I just had to put 2 years of 12 hours a day study on divergence into 1 hour, or into half an hour into the second segment. So you're using TRIX, you're using it set on 5. You're going to look at how many candles are between as one of your rules for why you would or would not take it, and you're going to use time of day. Okay, hourly, half hourly, 15-minute, 20-minute, things like that are fine. I wouldn't look at a tick chart for this, because on the minutes you can just back test them on FX so much. You can go back 2 years, and let's say you were looking at tick charts. Well, the tick chart 2 years ago is not going to be the same tick chart today, so that's where a minute chart more so is. For example, I think my little one is in double zeros. That's the size of his little jumpsuit things. In another 4 weeks or 6 weeks time, he won't fit in them anymore, okay, because he's grown. Well, that's the case with tick charts. Tick charts are good, and we will discuss how we use them in the future. Okay, but for divergence, if you're backtesting over a year or two, the tick chart back then of, say, a 377 tick chart, and you look at a 377 tick chart today, they're so different that you may as well do this. You may as well look at the 377 tick chart a year ago and say a 144 today, because that's how much the participants and the amount that each participant's putting through has changed over that time. So just some food for thought on why I want you to stick to the 60 minute, the 30, or the 15, or say the 20 minute or something like that. And for those of you who are interested, probably choose the FX market, because with the FX market you can start with just $1 a pip, so you can get a real move, you can get a whole day move, and you can make your targets and stops, say 80 pips and 80 pips, something like that, and that's, you know, half or 3/4 of a day, and you're only making or losing $80. Okay. Well, with the E-mini market, if you do that, you'll be with one contract and you try and get a half a day move. Even trying to trade the smallest amount, it's going to be a larger amount of money you're making or losing. So is everyone clear on their homework? Divergence with TRIX set at 5. Okay. Number of candles between matters, and time of day matters. Build 1 or 2 systems if you want. A market move system and a noisy type of system. Okay, if you want lots of trades every night, fine, zoom into a 5-minute, see how you go. You know my opinion on them, but we will help you with them. Great.